All right, good afternoon to you all. So let's start this month's class, and as usual we will be starting with the general advice warning, and it will come in front of us in a second. NP Financials advises all service recipients of the following. The information is provided only on general financial advice basis. This is educational in nature. Trading securities, derivatives, CFDs, foreign exchange contracts can be risky and is not suitable for all. So I'll allow you to read this out and then we'll get started. Alright, now that you have read this out, we'll start with the example sample trade idea. How the general questions, the general question which I get, but before that we have to agree to that. Trade ideas and trade outcome, general and risk advice warning again. All trade ideas or outcomes are hypothetical data. Remember, trading is risky. You can lose money. Past results are not necessarily indicative of future results. Please go through this and then we'll get started. Alright, so in that case we have understood. Okay, you need to click on this I agree, and okay, I understand and agree to the terms and condition financial services guide, privacy policy and disclaimer, and which are there in the website of NP Financials. Alright, you have to click on the I agree. Alright, so what we will do today, we'll try to understand how to hang on to a trade and so that we can actually maximize the time spent on a particular trade, so that if there is a potential to maximize the price objective, we'll try to do that. So the first trade call here was, I'll first go on the Forex and then go to the other asset classes. The first call, okay, I hope you can all see my screen and all hear me out. Okay, right? So in the chat section, let me bring the chat. You can actually write your questions here. Yep. All right, so the first one was on the 1st of September. So as you can see, there was, I have increased the number, we have increased the number of example sample trade idea, and as you can see, we have shared so many example sample trade idea in 1 month. In the last month, 27th of September was the last one, and the first one was on the 1st of September. So the 1st of September we'll start with the USD JPY, and the example sample setup was on the 1st of the 9th to go long on 111.44. So 111, we thought there is an opportunity for USD JPY to do a possible upside move from 1st of September. Alright, so this is a more as you are doing the monthly weekly analysis, it's always better to do the analysis on the daily front, so that you can see the bar by bar. And this was the 1st of September, 31st, yeah. So this was the first one. Right, so we have just started, you have not missed. So what we are doing it today is to analyze the trade ideas and to identify how we can hang on to the trade so that we can maximize. That is one question which you always get. So when we are here at this point, the trade was given after the 31st. On this bar you can say actually um, uh, 31st of the trade was given on 1st of September, and we are discussing the trade idea which was here on the 1st of September. USD JPY go long on 111.44 and stop 109.60. So what we will do, 111.44, 109.60, we'll draw two lines. 111.44 is around this point, and 109.60 is around low of this one minus some pips around this point, yeah, around this point. So this was the trade idea, because before this, what is happening, when we are all seeing this bar, when we are all seeing, the universe, the planet Earth is seeing, everyone, every trader is seeing this bar, as we are also seeing, you are seeing, I am seeing, everyone is seeing. I hope you can see the charts here. Yeah, so when we are seeing that, I'll change this color to a little better so that it is more visible. Yeah, so that's much better. All right, so when we are here, why this call was on here 111.44 to go long is the identification of this is a possible up move which is going on, because you can see from here to there and there to there and there to there. Pick the first P star is here when this P star is broken, and then here to here and then here to here. So when we are here and price is coming down like this, like this, like this, is coming down, so we may see that this is going down, this may go, and we may think that this is actually downtrend. That is the possible mistake what we do, because if from here to here it is uptrend, then this from here to here is not downtrend, it's a correction. So when we see this correction and a turning point here and price is going up and the call is given on this date, so why the call is given on that date, why the price stopped here, and why our stop loss was below the previous stop, will everything will be clearer if we join a Fibonacci from this swing low 29th of May to this swing high, which is 19th of July. 19th of July, if we join that big one, then we can see the 50%. We don't know where the price will reverse, but at this example we saw price actually stopped at the 50% dot. At the 50% dot, then we'll take this out 38.2. So we took the 38.2 and we saw, and we can take all the 61.8. If you wish, you can actually do that, because no point in keeping those lines which price is not actually interacting. So we took the 61.8 Fibonacci retracement, 78.6 Fibonacci retracement, and we only kept the 50%. As you can see, this is the 50%, yeah, the thick line. Price exact came here, and you may wonder why price stopped here at 50%, why price did this. As we know, there is always a possibility of crack and snapback, and this is an example of a crack and snapback. So price cracked 50%, and then actually went up to maybe 78.6, not yet, 61.8. Yeah, price actually went up to 61.8 at that point, as you can see. 61.8, price went up to that point, 61.8, and did a small crack and snapback, and there is a small crack and snapback here, exactly close below low, and low taken out, and then close above and high taken out. Yeah, the best trade is probably when this high is taken out by 20 pips, 110.78, but we gave a safety margin, we kept a safety margin, and we wanted to see that P1 P2 is broken before that. So in this example, P1 is broken here, as you can see. This move from here to here actually took the previous P1 peak here, and this move actually took the previous one, actually I think these two are same. Let's see, this high is 111.43, our call is 111.44, and yeah, there is no peak here. All right, so giving a call is easy, because we see that this is getting a reversal from 16. Let me delete this line so that it is clearer. So and that was the call, and this is the stop loss, and this is the snapback. I'll keep the snapback, crack and snapback only, and then we gave the call here. So when we gave the call here, let's see what happened to the price. We will enter here at this point 111.44. Actually we entered here 111.44. This was the trigger bar and activation, and price immediately came down, but our stop is here, and price will do and whatever it does. So anyone who has moved the stop loss below this point just after entering will probably have a problem, because this low is 110.68. If you have moved 110.48 or 50.58, let's see what happened. This fellow actually went below 110.52, went below this one, which is 68. 68 minus 52, this fellow went down 16 pips. So trailing the stop loss, that is the challenge here. Some people actually believe in trailing the stop loss. When it was trailed to this point, just after the trigger point at this point, then this was stopped out. Yeah, so at that point the trader will probably think, okay, I lost only few pips, but there comes the problem. But we do not do that. Our stop loss is here. So let's see what happened. Price did whatever it does, and it will continue to do whatever it has to do. So it broke this peak P1, and then peak 2. It has broke P1 P2. It had broke all the two, and then price went up. Yeah, on this date. So when we are here at this point, we did a mistake. I'll show you the mistakes what we do, because we are also traders and we also do mistakes at times. So the mistake probably which we when we are here, we don't know whether we are doing a mistake or not. When we saw this bar at a double top position at this point, a double top position, and this is an engulfing. As you can see, if we change this to candlesticks, then that will be an engulfing. Yeah, this is an engulfing. Not only that, number one, engulfing, and this is the mistake anyone can do. So engulfing and a possible double top. I say possible because I always prefer the double top should happen at the top right hand corner. The double top should happen here, but it actually did this one. This is not a perfect double top, but a possible double top. So at this point, and because of the FOMC also was coming or something like that, I think on 26th of September, if we go to the Forex factory, we'll see that there is a possible, there was the FOMC. I think this is the only uh, only news which at times we follow, not always. So let's go to calendar and go to the previous month, which is September, and go to that date, which was, yeah, this is the FOMC economic projection on 27th of 27th of actually 27th morning, that means 26th night, so 4 a.m. and the bar which happened here was on the 26th. So 2-3 things happened. The first thing happened is a double top, second thing is FOMC, and third thing is a possible reversal, engulfing. So what we did, we took the profit. We actually told that it will be booked, we'll book a profit if price moves below that point. Yeah, so on GBP, on USD JPY, what we did, we took the profit on that point which was below the low of the bar of engulfing, and that was when price actually reached. Well, if you have any question, please let me know. Otherwise I'll take the question once this analysis is being done. So September 1st September, yeah, we closed the trade with 160 pips profit, 160 pips profit. So 160 plus 111, that is 113.04. So we took the profit on 113.04, somewhere at the top, somewhere at this bar. Yeah, once we took this, and because there are three reasons, as I told you, FOMC kind of double top and an engulfing, price did whatever it actually does. It went up on the FOMC and actually continued to go up. So that was a small mistake which was done.
Did you close below the low of that
100 and what, where did we close? Puru is asking where the trade was closed. The trade was actually closed on USD 160 pips plus 111. That means 112 112.74. 112.74 was the 112.74, and the low of this one is, yeah, probably at this point at the close we closed.
but was the low was not taken out.
Yeah. So the mistake, yeah, Puru is saying the low is possibly not taken out. Yeah, only by 6 pips, and that too by an outside bar. So what we could have done a better is we could have trailed this take profit to below this, maybe 20 pips below this bar, or 20 pips below this red bar when the FOMC was happening, and we could have, if we would have done that, you would have gone, we would have got 97 pips more. So this is one way to hang on to your trades and not to get panic, come what may, maybe FOMC, maybe non-farm payroll. But if we stick on to your trade rule that I will only get out if the close below low taken out, and so on and so forth, then possibly in this example you would have got 100 pips more. Your questions? You can ask any questions. Binod says he's trying to log out and back, log back. Binod, restart please. Thanks, Binod.
Thought I had a question.
Rosemary says yes. Here answer okay. It's break of falling flag. Is it a break of falling, rising and falling flag in uptrend? So is it a break of? You have to actually tell me. Uh, you have to tell me the dates. Okay, so which one you were referring? I don't know. If you are referring now, I don't know. I can't see that. You have to tell me the dates. Where did you saw that falling? Where did you see that falling wage? Yeah. Okay.
Yes.
Yes. Puru is saying yes. And question is, Sri is asking, is this a falling wage? Many people will draw the ways many different way. I don't know which way Sri you have done it. So this may be considered as a falling wage in an uptrend. Yes, possibly yes. Puru said yes, because this is a uptrend when in the peaks are broken.
No, but you see
Hmm?
the two it was a trend line broken because two peaks it is
You mean this one?
yeah
Yeah,
it's a
you have
two
joined
peaks
this
and
one.
that one yeah
Okay.
it
Yeah,
is clearly
yeah.
the
Even
first
the
one
top.
was
Yeah,
yeah
yeah.
it was broken and then
Yeah.
it did not pull back it did not snap back so you could have
Mm.
waited it was
Mm.
waited snap back and so the two bars not snapping back
Yeah,
probably still on normal.
yeah, yeah. Puru is saying, Sri is saying, is this a, Sri is asking a question, is this a falling wage in a uptrend? Possible answer is yes. Not a very good one, but yes. And and Puru is adding to that. Puru is saying if he has drawn a trend line from 1st of August peak to 15th of August, and it is a break of this bar has broken, high taken out, close above, high taken out, and these two bars, more importantly, these two bars did not close below this bar. So that is more important. Yeah, so this is more important, that's why it is a possible continuation. Yeah, very good, excellent. Yeah, go ahead.
Now
See how price got bounced from what Puru drew the line. Fantastic line, very good. Yeah, fantastic, excellent.
on 14th actually
Come again.
14th if you go to 14th
14th of
14th or just to 12,
This one.
12, 13,
Yeah.
13, yeah. Or 14th, yeah, or 14th, you say, 13, 14th, yeah. Now, what happens when you showed the 50% Fibonacci level? It
Hmm.
bounced back on that 14th, then
Hmm.
13th, then 14th.
Hmm.
So, what happens? We don't know the right side that time,
Hmm.
it again crack and snap. But
Hmm.
if I don't know whether the signal was there, but if forget about signal, my intention will be to go long immediately on that morning star. It's not a
Hmm.
morning star, it's not at the bottom, but
Hmm.
let's say you see that
Hmm.
there is a crack rejection,
Hmm.
50% Fibonacci. So,
Hmm.
till then mindset will be 50% to go long.
Hmm.
Okay, so if you have gone long, then you will
Hmm.
be again stop out. Then if you see you go next few bars and then again it is coming down, then you have hesitant to go long because you now think that the 50% rejected now, whether I should, whether it is a downtrend now because it is not coming down. So when to enter is always a question because 50%, 70%, because you see there is a reversal there and you enter there and again you get stopped out or whatever.
Hmm.
So how to make sure that you are correct because not to enter there? Like is it if there was a signal you would have entered that on 14?
Okay, good question. What Puru is asking is,
Because it will lose the confidence when it starts coming down again to 70%. Then you
okay,
feel that it is not uptrend now.
yeah. So Puru, I'll explain what Puru has asked. And Puru has asked, I'll just, yeah. Rosemary, you were saying something? Okay, so if you are not speaking, then possibly you can mute your mic. All right. So what Puru on this bar on 14th of August, what we saw there is a bounce, not actual bounce, but the support was there on the 50% Fibonacci, and we attempt to go long. All right. So if your rule in on Fibonacci trading, if your rule says you go long when this Fibonacci bounce is there, for example, this one is a morning star on the 50%, and the sorry, can someone mute the mic? All right. So whose voice? Whose voice?
Something.
Whose voice is this? Please mute the microphone. It's quite voice is coming here. So we know Pankaj. I think Pankaj, can you mute your microphone because everyone else has Sri and Pankaj. I can see your voice, your microphone is not muted. So please mute your microphone, Sri and Pankaj. All right. Okay. So Puru is asking, if on Fibonacci we have to go long. Thank you for that, for muting the mic. So the high is 31.6. So plus 20 pips, we can go at 51.6, 31.6, 51.6. Okay. So we'll go long here on 10th. So on a Fibonacci trade, if you are going long on that at 151.11, sorry, I deleted the Fibonacci as well because that's a 50 bounce here. As you can all see, 50 bounce there. So if we are going 50 bounce, entering at 20 pips on top of this, so the point here to be noted in this rule on Fibonacci is, if you are trading Fibonacci, okay, fine, that's a fantastic, we also trade Fibonacci, but the rule should be when we are entering on a Fibonacci trade, the stop loss should be below the another Fibonacci. If you remember Fibonacci trade, yeah, stop loss is always below another Fibonacci. So if we are entering at this point, which we are entering long plus 20 pips, sorry, high plus 20 pips, I'll just write high plus 20 pips we are entering. Okay, high plus 20 pips we entered there, And Fibonacci always Fibonacci trading says that you should keep the stop loss below 20 pips here. So the stop should be uh, stop should be Fibonacci, which is next one, so 61.8%, which is reading is 110.04, 110.04 minus 20, 110.04 minus 20. So whatever it is, we'll put the stop loss there. Okay, so we have entered here 111.51. We don't know the next bar, so our trade should read as this: long entry 111.51 and stop loss 101.04 minus 20, which is 110 109.84. Okay, let's see what happened next time. So we did not enter on that bar because it did not trigger. We are still not triggered. Now this 61.8 is actually playing into place, coming into place. So what we will do, we'll take this 50% out and then wait for the 61.8 to play out. Now it has cracked, and immediately we may think that it can be a crack and snapback. So it actually close below, close above, crack and snapback, and we'll now put this entry point above 20 pips of this, which is 110.75. 110.75 is the 110.75 is the actually new entry point. So we'll enter here, and our stop loss should be below the next one, which is 78.6. So we'll move the stop loss now to 109.00. So our stop loss now is at 109.00, or you may say 108.90, and we are entering at 107.75. So now we enter, our stop loss is here. So this is how actually you should play the Fibonacci game if you are playing it. So my point here is, trade whatever you trade, whatever way you trade, but please write down the rule and always follow the rule. So this is the first trade which we got some pips, but we lost some pips. So there was a mistake which was done. I will show the second trade on the on our example sample trade.
Before that,
Go ahead.
when you go that when you entered already and then you see a turning point on 30th probably. 30th.
We entered on 1st of September. Yeah, our call was on this bar. Yeah, go. We entered here. Our stop loss is
Sorry,
here.
no. 14. No, we entered on
1st of September.
22nd.
You are referring to call, or you are referring to Fibonacci?
Yeah, based on Fibonacci.
Fibonacci. We entered here. Yeah, we entered here.
So now on the 30th, if you see a turning point,
30th.
take on it, you'd be out now. That would be a
This one here?
30th.
Sorry.
Yeah, that one.
Yeah.
That was a turning point. So because when you're in, you go bar by bar and you take decisions based on bar by bar. So you see a turning point. Now you put your whatever minus 10 or 20, and then you get out of that one. Now that was a challenging because price will keep on doing that. Or even you see like a head and shoulder there, and then all this will make you scared about things. So how we know that we are still in a good run up position, like
Yeah.
DC situation? Because see, decision making always scares you there where you quit, and you
Yeah.
don't want to quit. So
Okay.
how you
So
know this?
Puru, good. So Puru is asking, if on Fibonacci we have entered on this trade, what should we do on this bar or on this bar, because this is a turning point. So this is a turning point. Yeah. So this bar is a turning point. We have entered here. We have entered on here on the Fibonacci, and we saw this. So if these things will happen every time. Every time these things will happen, whether it is 1 minute or 1 month or 1 day or 2 day or weekly, doesn't matter, or 4 hour, 12 hour, doesn't matter. So this is a turning point. So the first question is, if this is a turning point, what else we are seeing? Are we seeing a double top and a turning point? So that is my first question. So my first question would be, is it a double top? So for that we have to identify the line here. So this is a possible Not at all. I will not consider that. Okay, first let me see what, let me think, let me tell you what you think probably. So you may think that this is a 111.88 can be a double top, and then 112.15 is a double top. So if you, even if, why I say my thinking is not that, because I would consider this zone as a double top zone, not the one which I showed you.
You don't consider the peak broken, and again the double peak is broken. So is it double top locally there on
No.
24th, and why you don't think that
Yeah,
24th
that's what I am
and
explaining. Why what is the color doing? Alright, so in my point here is double top. Double top should happen here at the top right hand corner. Double top, yeah. Double top should happen here. So if we consider that this is a possible double top, no, it is not. First of all, because this high is lower than this 111.88, so that is number one. And number two, this is at the middle. If you are at the middle, then don't fall in trap of double top double bottom. That's the regular problem which I have seen through different traders. When we are starting our career, or we are doing it for 1 year or 2 year, we get confused with the rules, and we possibly forget the rules, that, and we get trapped. We got trapped in the middle. So whenever there is a middle of this zone, then first of all, this is not technically double top, because this high is lower than this, and this is not at the top and top right hand corner. That's why we could have avoided this. Or if we have forgotten that rule of double top, then possible is you have to draw a Fibonacci. Now we are here, we are confused what to do, so we'll draw a Fibonacci at this point, and then because this is a possible uptrend, so we'll wait for the reversal or close below 50 and then low taken out, at least 50, not 38.2. Then in that case we'll possibly get out. So this immediately close below, close above, so is a crack and snap back. And so this fellow close below 50, and then next one is high taken, low taken out. So if this is 20 pips, then possibly we'll be out. So this is 14 pips, so we are still in the game, and so on and so forth. Yeah. So this is the way in which we have to handle our in between confusion, whether it is a double top, and we got confused here, not on this bar. We got confused on a level here when the double top happens here. I told you it's a kind of double top, not a good double top. Yeah, so we got confused on that bar, and we plain and simple we went out there, and price actually taught us a lesson that no, you have done a mistake and there is room to go, and it went up. Yeah. So your question. In terms of technical, what is the difference between forex and commodity? Rosemary says no. Pankaj has his mic on. Yeah. In terms of technicals, I don't know what is this question. Uh, in terms of technical, bar by bar, there should not be any difference between forex and commodity. Only difference is the duration and the gap and their momentum and the volatility of the different market. For example, if forex is moving within R1 R2 R1 S1 in a ranging market, more often than not commodity will probably not actually stay within R1. It may go up to R2 and R3 and so on and so forth. So just to show you what what Sri is asking. Yeah, see, Sri, as you can see, this is a commodity chart because he is doing commodity trading now. More often than not, probably price will go and touch R2. This is R2, and so on and so forth. In a good, this is a market which you don't trade. So, for example, we have given a trade in the LC, that is live cattle, and see what live cattle is doing. Live cattle has broken R2, and it is now broken a previous month R3, and so on and so forth. So when it breaks like this one broken R2, R3 broken, so it actually moves very fast. So that can be one, and then second one can be the gaps in the. Okay, so let's go to the next call which we actually gave, and the next call I will be interested to discuss is the. I'll come to the shares, but I'll first explain two or three trade calls which we and then we'll go to the EuroCAD. First we discuss this sterling, and this is share, this is index, this is commodity, this is next one is 7th of 9th on EuroCAD short. We told that 7th of 9th there is a possible short on example short on EuroCAD 7th of 9. So let's go to 7th of 9 EuroCAD. Seventh of 9th, so we will sorry I forgot to save it, so now I'll save it. Seventh of 9. Yeah, on 7th of 9 there was a thought that there is a possible move on the downside for the EuroCAD if price cracks through 151.70. So I'll first draw 151.70 line, 151.70, and then 154.30. So 151.70, 151.70 around this point, and 154.30 around this point. Since this is an international trade call, we keep a little bit more. We actually take a little less risk, so that people are not getting stopped out very easily and getting the pips. All right. So on this at this point, everyone is seeing the chart. We are also seeing the chart. We means as a company, and I means as a trader. We are also seeing the chart. So when we see the chart at this point and the trade call at a sample trade idea example discussed here to go short on this bar, why possible reason can be if we join this to this, then there is a possible crack and snapback. First thing happened here. So we joined the swing high, which is 55.86 on the 25th of June, 55.86.7, and this bar is 55.85. Yeah, so this is the swing high. So 25th of June and join to this bar, which is 20 July. We got a trend line to the downside, and immediately on that, I love this. Actually, we as a trader love this phenomenon. I call it crack and snapback. So it cracked through this line, whatever line, maybe horizontal, maybe diagonal. It cracked through this line and immediately snap back. So this could not fail. This could not do. So this is a failure. This actually did this job. So this close above and this close below. I get excited seeing this, and then we gave a trade call at this point. Example trade sample setup 151.70 will go short. All right. Let's see what market has done. Okay, before that, do you have any questions? So if you have questions, please ask these questions. Please hang on to your commodity questions. When I am in commodity, I'll answer this question. Sri is asking, do we use price line in CT in commodity? Okay, we'll use that. We'll answer that when I am in commodity. I'll explain that. Okay. So let's go to this one, EuroCAD. So we are here at this point to go short at this point. On this bar, we are thinking that okay, possible we can go short here when 151.70 is triggered. So nothing happened, we are short. So at this point our short sample trade was actually hit, and we are short our trade. This one is here, and again as you can see, this is again a crack and snapback, close above, close below. So crack and snapback. So good. This is bad. because it closed above, and but again there was a problem there. So in this case what we could do is we could actually change this line from here to there, or you can draw a new line from here to here, that you can do on trend line. If you are trading on trend line, that is also possible, and we can actually do this. Yeah, all right, so this is the new line, and let's see how we manage. So we are still in the trade. Now we are having a problem here, whether this will be broken and will be hit by the stop loss, and again a crack and snapback will happen. We don't know. Let's see. So actually the price got rejected from our new line. When we joined this line, we were not knowing that price will be getting a rejection there, but from our technical analysis we have observed for last so many years that these are the things which happens every time. So we modified this line from here to here, and price got a rejection there. So we are on the trade, we are hanging on, and this we are actually got a better benefit here, because we hanged on to the trade and we have not moved the stop loss and so on and so forth. And this trade actually benefited, given us a tremendous benefit. And when we are at this point, I don't know what you did, we are actually running a profit of 380 pips, and now a decision point has come, and the decision point is asking us a question, what to do. Is it a double bottom at this point, because the position is perfect, because the position of the double bottom is perfect, bottom right hand corner, bottom right hand corner. So bottom right hand corner, and we have gone short from here. We are running almost a good percentage here, 300 for 80 90 pips. So I don't know what you do. Best thing is to best thing you need to tell me that this is a possible exhaustion gap, and possible, not a good one, but all sellers out. This is a better one. All sellers out at a support, possible you can get out or hang on to your trade. So we hanged on, and we are seeing that okay, this is a possible scenario of a morning star. Now a possible morning star scenario is there, not, and price did not respect that morning star, but still hanging on, because nothing has happened to get out, and this is a problem. And this bar actually engulfed the previous two. This bar is an engulfing of this, and this is a crack and snapback, only because we have drawn a line here 147.99 on double bottom, and it closed below and closed above. On this point we think to close the trade, because this is a class, double bottom, and this is the exhaustion gap, of the move. This is the exhaustion gap of the move, and we actually took the trade possibly out at this point. Let's see where do we close the trade on EuroCAD. 300 pips. So 151 plus 300, 154.70. So 154.70, 54.70. I don't know. Sorry, by mistake. I think in calculation I did a mistake. I added it instead of the, okay, 151.70 minus 300, so we are going short. So 148.70, we 148.70 at this point at the close. When we saw this close, we should be immediately out, because that's a crack and snap back, and there is a possible get out or closing your trade. So in this trade we did not do any mistake, and we actually got the benefit of the market move of 285 pips or 300 pips, something like that. So your question on that. So what I'm trying to explain today is how to hang on to your trades and take benefit.
Here you are not looking at retracement now to 38% or
There was no opportunity to look at actually. We could have. So Pruru is asking, is there a possibility to look at 38.2 and 51? Okay, we can do that. So what we could do is we gone short here, and we are here at this point. So possible we will draw a Fibonacci from here to here to see what the price is doing at this point around 88 or 79 49 or at least 61.8. so we did not see any reaction because it cracked through 38 and 50 and 61.8 and 77 and 88. So the entire Fibonacci is gone. When the entire Fibonacci is gone, the only thing which is remaining is a possible double bottom, which is in this case this one here.
Is it on a higher time frame really a major support line?
Puru is asking in a higher time frame means what? Is it a support there? Weekly or huh? Weekly? So we'll go and see whether weekly is giving a support there or not. Possibly yes. Maybe this one or maybe this one. 148.18, yeah. So last week bar actually did that. Your questions on this handling of this, because there is always there is always a challenge how to handle the trades once we get in. All right, go ahead.
Is it a downtrend you assume now overall? Or you can't
Yeah, depend on what trend you are seeing. So if you are seeing at this double top from this point, then possibly it's a retracement. This is the double top here, double bottom, sorry. This is the double bottom. If we are seeing that double bottom, then if we join this Fibonacci, then it will be a retracement. Remember, we are in a weekly chart. Alright, the next one, before going to the other asset class, because Sri has asked a question on commodity, I'll go to the last one, which is the Forex, which we did on the GBP USD. I think we did this one here. GBP USD on 30th of last month, we went long on 29.55 on an example sample setup. Let's see. 30th 129.55 GBP USD. Then I'll go to the other asset class. GBP USD on 30th of last month, we thought that price is going to go up. 30th, 29th, 30th. All right. So on this last bar, as you can see at this point, we thought there is a possible up move for this currency pair. Hence, we put a sample example here to consider buying long, because this P1 is broken and so on and so forth. Yeah, and this is a possible head and shoulder also. All right. So let's see what happened and how did we manage, or what mistake we did as a trader. On this date, we put a trade idea 129.50 and 126.40, 129.50, 129.55. Actually, we went a long 29.55 around this point, and the stop was 126.40 below this point. Right. So this was a possible limit buy, because we gave a order here. Price has to come below around 50% of this big bar, and we should get in. So we get a call at 129.55 around this point, which we got triggered here at this bar. So let's see what we did, or what we did correct, or what we did mistake, and so on and so forth. Yeah. So when we have this bar, if you are a trend line person, you probably draw this trend line and wait. So this is a post crack of this trend line. So this is not quite a good one. And now what we see is we got trigger, but we are at this point now. We are at this point. So we got trigger at this point, and we and on those 2 days, price was on negative for 171 pips, while our stop loss was here. So not to bother about the stop loss, and we are actually 171 pips. But this bar actually gave us some hope. Then what we do? We modify this trend line from here to here and hang on to the trade here. Trade went very well till we did a mistake here. So we closed the trade here, which is a minus 130 pips. So we did not make, we actually made minus 130. Actually it's a loss. 129.55 minus 130 is 128.25. So we 128.25 we closed the trade. 128.25, 128.25. I think we closed the trade here. 128.25, 28.25, around this point. Okay, so the mistake what was done on this trade is we close the trade here. It's a big mistake. It's a big technical mistake. We close the trade around 29, 20, around this point. Yeah, we get it there. When we saw this three bar coming, and this close is not below this low, and this second bar close is not below this low, and the third bar close was not below this low. So from our previous knowledge we know there is a 3 bar reversal possible. So 3 bar reversal price will possibly jump up now. On the fourth day, so when price came below this 28.45, we closed the trade here. That's a tremendous mistake, and the mistake was we should wait for the close of this bar. Without waiting for the close of this bar, what we did, we closed the trade here at 130 pips negative. Here 130 pips negative. 129.55 minus 130 is 128.25. 128.25. We close the trade around here thinking that this bar will close below this low. That was the biggest mistake on this trade. That's what I say, we also do mistake, and this is the mistake what we done in front of you. So we thought when we went to bed at 11 or 10, we thought that this bar is going to close below the previous big bar low. That was the biggest mistake was done on this trade, and we got out at this point thinking that this close will be at this point, because we have not seen, we are at the 10 o'clock in the night or 9 o'clock in the night, and we think that this bar is playing here and this bar will close below this line. So that's a mistake, and what happened is history. Alright, so what happened is a history, and we got out here 130 pips. Price actually went up 450 pips from our getting out position, and even now today we are 300 pips out in a positive from our position, because only mistake which we did here is not waited for the close of this bar below the low of this bar. So this is a 4 bar reversal, and price did havoc after that 4 bar reversal. And look at this line which we have drawn by joining the low. This is the beauty from here to here, and then what happened, it got a crack and snap back at this point. Close below low, high taken out, close below and close above, crack and snap back. So in future, if you see 1 bar, 2 bar, 3 bar, 4 bar not closing below the big bar, then it's a 3 bar, 4 bar reversal, and you should hang on to your trade. Like this fellow is a 1 bar reversal because it did not close. Like this fellow is a 1 bar reversal because it did not close. Like this fellow is a 1 bar reversal because it did not close. This fellow is a 1 bar reversal because it did not close. This fellow is a 4 bar reversal. That 4 bar reversal actually panicked us, and we got out by doing a humongous mistake. This is a 4 bar reversal. So you can write down here 4 bar reversal, and this is 1 bar reversal, and the next one is 1 bar reversal, because only one bearish bar, 1 bar reversal, only bearish bar, 1 bar reversal. This bar you should get out here because it closed below this fellow and the possible low was taken out at this point. So the loss of profit in this bad trade which we did, or actually bad close, was from here to here, and that calculating from this point to this point is 200 pips. Did you get it? Question?
If you had low of like on 26,
26. This one?
26. Yeah. Now that is not low taken, but if the bar was low of the previous bar, then would you be considered low taken of that bar or the previous big bar low? Like, that is the internal low. So which low you consider to
Big
take?
bar, this big. Like this is a big bar. Like this is
You
a
did
big
not
bar.
consider that the first. No, I understand, but the first bar was low was below this one, which was the 21st, right? So
Huh?
now 21st was the low taken out.
21st.
Closed below. 21st was closed below, right?
21st is close below,
Closed
yes.
below. Okay. Now
This bar
example.
low.
Yeah. But then again, if you had a situation again closed below low taken out, once it goes up, then what decision is like that?
Yeah, yeah. So Puru is asking whether to get out on this low taken out or this low taken out. Is it correct?
Yeah, if there was a close below, it is
Yeah.
not close below, but
Yeah.
example, if there was a close below situation,
Yeah,
it
like
went
this
up.
one here.
Yes, yes.
So in this case, either you get out on this low taken out 21st of September, or you get out on this bar 27th of September, because both of them close below the previous one. Both of them close below, like this fellow close below, and the next one actually close below. So you should either get out here or get out there when the low taken out. Yeah, that's a good question. So these are the ideas which I wanted to tell you, share with you, that it is possible to do mistake, but it is also possible to learn from it. Could you please run through orange juice? Yeah, I'll do it. Explain orange juice. Okay, I'll do that. The bar of 29th is a big bar. Would it have been a higher probability to take the trade on the break of the big bar instead of a limit order? 29th. Rosemary is asking, the bar of 29th is a big bar. Would it have been a higher probability to take the trade on the break of the big bar instead of limit order? 29th. This one. So Rosemary is asking whether to take, whether to wait. I would say my answer to that question will be no. Rosemary is asking, instead of placing a limit order at this point, 28 28 15 55 where you got in, she's asking whether it is a high probability trade. Yes, I would say yes, because this is a big bar, and the high, when this high is taken out, then there will be a possible higher probability. But problem with the big bar high taken out is you tend to lose a lot of pips, Rosemary. Yeah, so I think, yeah, otherwise you wait for the 50% of this big bar, 50% of the bar to come down, like it will probably check this line as well. So it will probably check this line 29.36, 29.36, and probably if we are not ready to take this risk exact, so probably we'll add 50 pips and enter at 29.56, 55. That's what we did, and in fact we could have got better, but it is impossible to know this is going to happen. But what Rosemary is asking, there are two answers to that question. Yes, it could have been a safer entry, but at the same time you would have lose some pips there, which is to the tune of 20 pips from this, 100 pips. You would have sacrificed 100 pips on that. So next question is, was there a significant level on the 20th to indicate closing trade? 20th to significant level 28th 20. Okay, let's go to 20. This is 19th. This is 20th. Rosemary is asking, is there a significant level on this one to go? If you are, again, if you are doing bar by bar analysis, then probably I would say yes. I would draw this line and I would draw that line, and this is the resistance line now. This is the zone of resistance at this point. Yeah, and yeah, so if you consider this 129 132.93 is resistance as well as 133.63, then possibly you can get out at 132.68. That could have been an excellent close of a trade. If you are doing that, yeah, I must appreciate that you are doing a good job. Yeah.
Like when you see a weak pressure or like the long width, so you can see the pressure opposite pressures. So how we know that in a part particularly, like if there is like if the buyers are, if in the long run, if the buyers are relaxing, so that's why it's coming, or the sellers are getting stronger. So how to recognize that, like the way we find out from the bar or candle, whatever. Like like the buyers, if they are going strong, they will just relax at some point. So they'll just relax to sell off for whatever reason. Nobody can keep on running. So or the sellers are getting active. So if how we recognize that if some retracement is happening on that.
Okay, Puru is asking how to identify.
Or whatever reason.
Yeah. So Puru is asking how to identify whether the buyers are taking a breath or sellers are coming in. To answer that question, it will be absolutely contextual. So let's see. Let's try to answer that question with the what the instrument in front of us, like sterling. Sterling, as of now, on the last date Friday, which is 5th of October, what we saw, what I saw, I can only explain that. What you see, you have to explain me that. Alright, so on this point, what I saw, even if I don't draw this line, no need to draw this line. I am only drawing this line on the monthly class so that you people understand what we are trying to do. So I have trained my eyes to draw this line, so it will draw that line, and in that case, it is telling me, all right, so possibly it has broken one a crack and snapback peak, but technically it has broken the two. From bookish technical knowledge, it has broken P1 and P2. All right, so that is first identification of a uptrend. Yeah, so in this case, to answer Puru question that whether these sellers are actually setting in here or the buyers are taking a breath to hang on to their position, I would say continue to draw trend lines and Fibonacci, because it is impossible. That's an excellent question, but it is a very difficult task to do, but at the same time easy if you draw continuously the way I am trying to show you continuous trend lines. For example, if you first of all you draw this one, then second of all you draw that one. Of course you have to do, if you have to see another bar, let's go another bar here, because that's a possible crack and snapback. So we went and we joined this line, yeah, so which is lower. This low is 129.24 and this is 129.22, so we'll join this. So one way to answer Puru question, which is as per my understanding is the best way, is to draw trend lines and draw Fibonacci either from here or from there to see whether the critical levels are broken. So on the first trade we'll take the 38.2 because that is meaningless now. We'll take the 50, meaningless. We'll take the 61.8, which is meaningless. And we'll keep the 78.6 because from there price actually jumped. And then we'll take the 88.6 out. And then on this Fibonacci, we'll take the 38 because price did not do anything on that. And we'll take the other ones because price actually did not reach there. We'll keep the 50 because price actually is trying to bounce from there. We'll take the 61.8. Alright, so if I am you, To answer if that question comes to me also, yeah, because to a trader this question will always come, whether the sellers are setting in or the buyers are still hanging on and taking a breather. So I would say at this point on this date, which is 4th of October, I would say buyers are now buying again because it has retraced quite a good amount, 78.6 and 50. It is a quite, and that is if you have drawn the Fibonacci. If you have not drawn the Fibonacci, then the trend lines which I have drawn will give you a better understanding. Crack and snap back. So this fellow close below and this fellow close above. So this is a crack and snapback. So on this one, my understanding, my reading on this chart would be to that buyers would be still interested in this instrument, and that's what actually happened here. So this is one way, Puru. But if all the levels of Fibonacci is gone, then the trend has reversed, and if all the trend lines is gone, then the trend has reversed. Alright, now I'll go to another asset class which is commodity. Sri has asked some questions. On the commodity, I'll discuss one trade idea, sample trade idea, and then we'll go to the question. So we'll go to the which one was that? Sterling, and then we did a call on commodity on orange juice. I'll come to that orange juice, and I'll show you. Ah, so we'll first go to the live cattle and then go and show this orange juice. What I'm trying to tell you is to give you some understanding or better understanding to how to hang on to your trades if the market is giving moving in your direction. So the trade which is running from 28th, so this is an excellent example of how to hang on to your trade. 28th of August, almost 1 month and 15 days, 10 days. On 28th, still the trade is running. Live cattle long on 11074 on 28th. On 28th, 11074 67757574 around this point. We actually try to under because this is doing hodgepodge, but it is again if you can see, if you have trained your eyes to see the peaks and drops, then possibly you are in a better compared to your competitors who are the international players, including all the big institutions and so on and so forth. So all said and done, this is doing somewhat this hodgepodge, but the tendency is to go long and definitely not go short. Yeah. So if this is happening, this is a very difficult trend, but anyhow it is going up because this is, we'll join this line and we got a bounce here and so on and so forth, and then we'll join this line and this broken, and then we'll join this line. Yeah. So when we are here, we thought that okay, let's try to analyze or give us example sample trade setup on this bar to go long. So at this point, yeah, so 28 we gave a call on this bar. All right, let's see what happens. We are in. Crack and snapback possible, no not taken out. Price is moving out. 11,500 is a whole number. Price is trying to play a game there. 11,500, 1 2 3 4 5 6 7 bar has not closed below this bar. Yeah, so nothing is happening here. So in this example, let me help you to identify. Once we got in here, So we enter here. Then this bar is a 2-bar reversal, and then this bar is a false crack and snapback, low not taken out. So you will write low not taken out, low not taken out, yeah. Then you will write here 1-bar reversal, the red one, 1-bar reversal, the red one. I hope you understand this 1-bar reversal, yeah, because did not close below. And then we'll go to this 1-bar reversal. This is a 1-bar reversal, and this is a 1-bar reversal. So not a single red bar, close below the previous green bar, assuming that this is green or blue bar. So we got 2-bar reversal after entry, 1-bar reversal, low not taken out, 1-bar reversal, 1-bar reversal, 1-bar reversal. We are hanging on to the trade. Okay, this is very interesting. Then price broke the 11,500. Again we saw a 1-bar reversal. Then we are again we saw a 1-bar reversal. How good is that? And we are here. We are still hanging on. We are still hanging on this trade because we have not closed it, and the trade is running with a profit of almost 560 pips. That's a good trade, and we hang on. And while we hang on, we just told you that after entry, 2-3 things happen: 2-bar reversal, low not taken out, 1-bar reversal, continuously 1-bar reversal. So that's why we are hanging on to the trade. So this is how it is possible to hang on to a trade, especially in commodity, more than 1 month if nothing has happened to get out of the trade. I hope this has helped a lot, or actually this will help you a lot to understand. Now I would love to hear a question from you on this trade, sample trade example. If you have any question, write it here before I go to orange juice. Is it making sense how to hang on to your trade, so that when the market is moving in your favor, you are not actually getting out?
There is, if you see that line, breaking that level of 110.75. See the how can we recognize that the buyers are making attempt and they're getting stronger on each attempt rather than weakening, like buyers when they want to try to break line.
Fantastic.
So
Excellent question. Yeah, so excellent question. Puru is asking on this point, how do you understand that the buyers are getting stronger and stronger instead of leaving the ground? That's a good question. So what I would say is probably on this first day when we saw this, this is a breakout gap. It has broken.
We can start on 6th of August.
Come again?
6th of August also, see 6th of August.
6th of August.
Yeah, the first item was to 6th of August.
Oh, okay, sorry, this one, yeah.
First item to 3rd
Okay,
August,
yeah. So Puri is saying that, all right, so this is the first attempt to break that, break this jinx which was there. Yeah, another why I gave this call, this is another good example of a base formation here. The base formation actually took a long time, and if you read our book on base formation, we have written the base actually takes longer time than the top, and there is a so the base formation here actually took a very long period of time from this date to this date, and the actually formation was here. Actually I would say from this to this. So this is the formation of the base and highlighted portion, and if I calculate the periods from this date to this date till it broke and we went in, it is actually 108 bars. 108 bars, that is 5 months 2 days or 4 days. So if you see this tremendous base formation like this, you would be excited to take an opportunity to reverse this possible trend which was downside. So which was downside, yeah, which was downside. So the base was formed here, and this interesting base formation actually gave us a idea that it is a possible good possible reversal. And why good possible reversal? Because this can be a head and this can be a shoulder, left shoulder, and this can be left shoulder, and this can be right shoulder, and draw a line, draw a line like this one on the head and shoulder, and this is the break of the head and shoulder here. And if we measure from here to there, I hope you are following what I am doing. So this is the break here, and if we copy this line and paste it, I'll paste it here because close above high taken out, and exactly price actually fulfilled our head and shoulder price objective there. Yeah, so to answer Puru's question, this is a beautiful example, excellent example of a base formation, an excellent example of a structure which is head and shoulder, which is actually formed at the lower bottom hand corner. If you can see lower bottom hand corner of the chart, regardless of number of bars you are considering. So all right, so now let's see the Puru's answer here, because we saw 5 months 4 days base formation, and then he said August, isn't it? 4th of August you said. I think he said this one. So on this point, actually buyers are coming from this because close above high taken out and the structure is broken. So buyers are coming here at this point. Let's see, let's write down here buyers and another buyer here. So this is the structure break and tremendous buying possibly happening, buyers, and this is the buyers. Yeah. So on let's start from this point, how the buyers are actually getting stronger and stronger.
You see the bar on 26th, I think. 26th. Yeah, the red bar. It looks like a seller bar. It is outer bar. So really, it's not really a seller trade.
Yeah. So you should ignore these bars,
yeah,
outside
so
bar.
still there is sellers not there.
Yes, still the sellers will only be coming if this line is broken.
Snapback, and that's a trap actually.
Yeah. Yes.
Yeah.
If someone has moved the stop loss, he will be out.
And that's why one trap was there below.
So this is a trap. And if sellers will be in when this is closed below and low taken out, and when this closed below low taken out. Let's see. See, this is again a trap here.
Yes, yes. And people will think that trend line is broken. And what happens, amateur players now, they always target that lowest. They think that the price will come to this double bottom. Yeah. And there where they get trapped. And
so this is a trap here. So if we actually write down T, then possibly we'll understand trap. So this is a trap there, and this is a trap there. Although it did not close below, actually it closed above.
People will just see that the line is running down, and they see that it is possible double bottom.
Yeah. So amateur traders will probably fall in trap here.
Because it is running very fastly. You see,
Yeah.
it is very rapidly coming down.
Yeah.
And there where they get trapped.
It's easy to get trapped here, but follow the rule. It did not close below, so we'll hang on and let's see what happened. Actually, market rewarded us because we did not fall into a trap.
Because if you see a trap, then the price runs very fast. That's the reason only. Because all these sellers will be trapped, and all the price will run very fast.
Absolutely true. So this is how you can actually handle the technicality of commodity market. Sri Utagi. There is not much and change, but only thing is the context and the understanding. Alright, so any question on handling this live cattle trade? Rosemary says yes, very very helpful analysis. Not a problem, Rosemary, it's my pleasure to contribute. Vinod is saying, why is it low not taken out? It has taken out previous bar low. No, low was not taken out of the bar which closed below. Vinod, it is a 2 bar activity. The first bar has to close below the support line, that is 1 bar, and the second bar has to take the low of the bar which has closed below. Sri says perfect. Puru, you are saying something?
Yeah, because see, once the crash happens,
Hmm.
then you see initially the peak bar has happened, the crash or
Hmm.
smackdown happens.
Hmm.
After what happens, actually psychology, the price doesn't move very fast. It goes in a line, but it will not move fast. The reason is that they don't want to scare the sellers now. They want to still keep a doubt in the mind that the price will return down. If you see that, you see that if they do another big bar, then all will sell off. They don't want to completely hit the stop loss.
Yeah.
So they'll go slowly, slowly, and he'll keep on moving the stop loss again, 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 then it will hit. Till then the price doesn't go, but
True.
once it hits the stop loss, then it goes very fast.
Yeah,
That's psychology
very
behind
correct.
that, yeah.
That's how exactly it works. Because the Puru is exactly saying the same thing. If you see the technicality, he is exactly saying the correct thing. But the technicality is to move up, you need sell orders. Otherwise, you cannot buy. If you don't find sell orders, you cannot put buy orders. So that's exactly what happens. That's why.
Yes, the price kept on slow up,
Yes.
slow up, slow up, slow
Yeah.
up. So they're still holding or slightly moving, moving, and one day is gone. They don't have chance to scare also. They
Yeah.
don't get scared.
So lot of sell order was here because people were panicked now on this bar. At this point, maximum sell order were there because people are thinking that price is going down, and then we put a big buy orders. The professionals will put a big buy order, and the price will go like crazy.
They relax for some time till the stop loss hit, and once the stop loss hit, they
That's
will
it.
go forward. That's it.
Exactly
No
correct.
looking back.
Very correct. There's no looking back. All right. So if it is helping you, let's continue to do that. Yeah. Question. Puru, you have question?
No, everything goes on psychology. Yeah, there will be no
100%.
yeah,
100%. It's on fear and greed only.
fear and greed only.
Nothing else. All right. So go.
When they want to go in the same direction, then they will scare. If
Yeah.
they don't want to go in the opposite direction, they will not scare. They will go slowly and they will get through.
If you understand that, that's fantastic actually. Yeah. Vinod says thanks, Partha. Not a problem. All right. I go to orange juice trade call which Sri Utagi has asked. Next to orange juice.
Also, one thing I'll tell you that
Yeah,
if
go
the
ahead.
price is going to any support level very rapidly fast, then be aware because that's a trap. Because no price will come down at a support level very rapidly because the buyers are very they are very aggressive to buy now, so they don't know to wait.
They will all buy there.
They will sell too quickly to come down to their level and get there. So they are running rapidly towards. So there will be no buyers.
Yeah,
So
actually, Puru is
that's a great
sharing
point.
very, very, very critical thoughts on the reaction or the psychological aspects of buyers and sellers when it is actually happening. So Puru is saying when you see a rapid drop on price to make a double bottom, don't get panic to start selling because that is the best position to buy.
Yeah.
Yeah,
So if you
very
keep on
nice.
doing again and again and again and again the same trap,
Million
because
times, trillion
what
times it
happens,
will.
even though you are technically very strong or anything, when you are in a trade, you are emotionally attached.
True.
A lot of people.
Unless and until
then
you have
when you tell them anything, the bars will
the hormones will get released.
it will. And if you see, if you have to go up, it will not go up immediately. At the last 5 minutes, 10 minutes, it will move because for 55 minutes, if you are doing an hourly chart, 55 minutes, it will keep on thinking it is going sell, and sudden buy because that's what the market want to tell you.
Yeah.
And that's because they are waiting for they'll put order at the last moment and
Isn't it?
change the whole bar.
What Puru is saying, I'll quickly try to show you in front of us. So this is actually not people selling. This is not actually people selling. But look at the craziness of price coming down. So these are the thing which Puru is saying. Don't get panic, but it is easy to get panic here.
Yeah. And the buyers completely switch off because the reason is once they want to go up, they are getting the best price. Even the price falls down, they are happier.
They are the best. They are the
Because
happiest.
they're getting happier because they just keep quiet. They put one big order, keep quiet. One big order, let the price come down, and they're getting best and best and best
Isn't it?
buying orders at the bottom. That's how it
Absolutely
works out.
true. Absolutely true.
And sometimes they will also, if there is a structure, then they will even track down to get the stop loss also.
Isn't it?
Their stop loss are
We
behind
saw
them.
that
So only
in live cattle.
P and T are safer, but if there's structure, be aware to give a stop loss. You will be stopped out very easily. So all these things are there, but yeah.
Puru has told a very good thing. Only P and T.
Will not allow
My
to
wife
sell.
also loves it. The way I analyze P and T. All right. So let's go to the next one, which is orange juice. All right. So orange juice, we gave a call. Let's see where on a sample trade idea. USD JPY, where is orange juice? Yeah, 10th of the September, orange juice long, 10th of September 15700, 10th of September 15700. You can make out that that was a mistake. All right, so let's see. Trading is not winning 100% of the time, but trading is about how to actually not to do mistakes. All right, so 10th of September. Sri has picked a good one. Let's see. All right. So what we did, let's go. Orange juice. 10th of September 15700. 10th of September 15700. So go long. 10th of September is this one. 15700. That is the mistake I think I did. I saw this big bar. Anyway, 700. I put a limit order. I think listening to 15700. Rosemary could have prevented this losing trade, I think. Let's see what happened. Beautiful. 15700. Okay. 15703. 15703. We went long. Okay, so let's see what happened. Why we put this number 15700 long. Alright. So on 10th of September, on this date. Okay. So there was a call here. Yeah. So if you are seeing the chart, I am also seeing the chart. And then we are all seeing the chart, and then we are doing analysis our own way. Alright. So the first thing first, what happened at that point? If we see what is happening here in the bigger picture, that it is when it went up, big way, came down, little way, big went up, same way, like double top, and then it did a crack and snap back here, again a crack and snap back here. So one crack and snap back here, it stopped here, it did a crack and snap back, it did a crack and snap back. So I get excited generally when I see crack and snap back as a trader. So I saw one crack and snap back, second crack and snap back, and then possibly if I am you, then I will draw some Fibonacci as well. So let's see Fibonacci, because we can do everything possible in the left hand corner, but we cannot do anything on the right hand corner because it is invisible. All right. So let's take this out. 38.2, no reaction. Take them out. 61.8, take them out. 88, take it out. 78.6, take it out. Keep it 50 because market has actually responded to that, reacted to that. Alright, what is the reaction? Plain and simple crack and snap back, and plain and simple crack and snap back. When I saw this 50% retracement, crack and snap back, so on and so forth, we thought that it will go. Okay, we'll give a trade call. Alright, we gave a call. 15,703. Let's see on this date what happened. We got in. Fantastic. We are happy. We got a trade. A trader will be happier if he actually gets into a trade. Then what happens is all psychological. Unbelievable. If he is not into a trade, he will be very unhappy.
Upset actually.
Upset. I am
Yeah,
not
I'm
trading.
not trading any market. That is the biggest problem.
Yeah, as if because we all are coming from salaried job. I always say, my grandfather used to say, if you are doing a chakri, I'll say in Bengali or Hindi, that means you are a chakar. In English, if you are doing an office job, that means what? You are doing a slavery, a kind of. All right. So that is the mentality. If we are not taking a trade, we think that we are not doing that slavery. We are not doing anything. All right. So we got into here. We got in here, and then that's why I think Sri has asked why we got this call. We get this call seeing these two crack and snap back, and we got into this trade, and then let's see what happened. Oh my goodness, we are still hanging on because it is a 50% possible again crack and snap back, and the balance is history. I closed the trade, not with 1%, but we closed the trade. Our stop loss was, that is another beauty actually, 15,660. So our stop loss was 15,060 when we entered the trade here. 15,060 around this point, our stop loss, and then we got out at, I don't know how we managed this. I think we managed to not to hit the stop loss. Let's see. The stop loss was actually how many pips? From this point to this point, it was 660 pips, and we got out at when the close was oranges minus 585. We could not say much, but a little bit, because price moved very fast, and possibly we got out here when the low of this bar is taken out. When that low of that bar is taken out, we got out. It is almost near to our almost near to our
Sorry, what is the criteria of you quitting or
the close below of this and low taken out.
why that part?
50% close,
50%.
close and low taken out of this.
Was this at the middle level? Why it came down? No, upper.
Yeah, I don't know. Price will do whatever it does. Sometimes, yeah, it came down heavily.
Again, if you see, there was no trap for the downside. That's why it didn't go up.
Possibly this is a trap.
No, but
Maybe
if you
this
see
is a
this
trap here.
on that one,
Hmm?
no, no. But if you look at, let's say, zoom out, zoom in.
Yeah.
Let's say, example, if your bar on 28,
28
yeah, 28,
to 8 September or August.
August.
Yeah.
See, if that bar was there, nobody would sell that. Nobody would sell that.
Hmm.
Even that is a big bar because
Hmm.
people will think it's too low
Hmm.
to sell that. So it's not really a trap.
Hmm.
So trap has to be a little bit upper so to catch people coming.
Hmm.
So that is not a trap. Again, the second bar is so there was no trap set up actually to go down. So to get upside, they need a few traps to below that one. That's why in fact the trap was above to go up, and it went up, and there was a trap, and that bit came down. So this is how it works. I mean, I'm just saying it's not
Yeah,
always the way, but sometimes.
yeah, always 100%. Puru is saying whether we got into a trap for
You need to
the
understand that any opposition parties are trapped or not. If you find that one, then you know what is going to happen.
very correct, extremely correct. So if you are going long, Puru has explained it very well. I'll repeat what Puru said. Puru said if you are trying to go long, see whether the sellers are trapped or not. And if you are doing the opposite, if you are selling the instrument, see whether the buyers are got trapped or not. That's the pain.
Yeah. So you have to go to that shoes and think that whether I would sell that if it was.
Yes.
If you think yes, then that means it is a trap.
Yeah.
If you think no, I will not sell that.
Yeah, exactly correct. Exactly correct. Yeah, very well said. Very well said. So, did I answer your question, Sri Utagi?
That is the most painful because once the person is trapped seller's order,
Very difficult to get out.
he gets stopped for one thing, and to come out of shock it takes some time, and he sees the price going up, but he is unbelieving that how I get trapped, and he keeps on thinking, and he
He's
doesn't enter the opposite trail.
he's trying to defend
Defend and
himself.
people don't people doesn't want to get wrong.
Yeah.
That's
Our
the
own
biggest problem. Yeah,
characteristics.
because they think how can I become wrong? It was so obvious.
That's why
And
90%.
the shocking thing, they should enter immediately on the upper position, which 80% will not do that because the shock will not allow them to go because their fear will get into mind, doubt will get into their mind.
I don't know whether you are listening to Puru or not, but he is saying exactly what a trader goes through. Alright. The next one I will do is another asset class which is possibly share, and I will do this one cochlear because we hanged on for a lot.
If you're in, let's say if you're in a trap also, the best thing if you're thinking that it's gone wrong, probably you could put upper limit order in fact, or
Opposite way.
stop order in fact.
Stop, I think.
For the buying, and that if that hits, then that's you are in good.
Isn't it?
Good
So
form.
what Puru is
But
saying,
if you're feeling you're going wrong, put a stop order on the
Yeah,
top to buy.
yeah.
Let it hit it and see that if that works. Even if you're stopped out, you're at least gone into the buying position.
that's correct.
That is the one way to.
So what Puru is saying, if we have gone long from here, there is a possible position to go short from there as well. Because it did not work. The long did not work.
So yeah, something went wrong then we can enter.
So yeah, the 40% of the trade will not work. We all know that. But if it is if it were reversing, that's what I always say.
And the
Yeah,
reverse,
market chameleon. Yeah.
yeah, and the reverse, the risk to reward will be good in the opposite way.
Mm.
The trap is even if you lose 1%, but
Mm.
you definitely get 2% in
Mm.
the other way.
And on from previous analysis, what we did for I think forex, you can all do that. This is a one bar reversal, but this is a failure. That is a failure. That is a big failure. When you see the first failure, you should get out. This is a failure because it's not a bar reversal. This bar is a reversal, but this fellow completely closed below and staring at you to get out, get out, get out, telling you to get out because I have already closed below this one. This is not a bar reversal. If you think that okay, I want to see this bar reversal, let's see. This is not a bar reversal. Here also it is telling you to go out because it is not reversing. It's not at all reversing. It is telling you, bloody hell, get out. If you are not doing
See,
that and you are trying to defend yourself, no, no,
yeah,
no, market will reverse, market
yeah,
will.
this is a doubt. This is, that's why the price doesn't drop very rapidly. It goes slowly, slowly, and oh, come on.
Aram se.
Or if you, one more thing also you need to notice that how the buyers got stronger. If you see first item was weaker, second item weaker, why the hell third item will be stronger at the same level?
Hmm.
Nobody buyer would,
Hmm.
sensitive buyer will do that. You
Isn't it?
understand?
Hmm.
Because
In this
uh,
position, right?
yeah, on 10th,
Hmm.
no, no,
Hmm.
10th, what about 7th, 7th bar.
10th.
7, 7, the
Right.
before that big bar. See, if in a buyer shows, if he
Hmm.
sees that the first item is not going anywhere, second
Hmm.
item, third item, he will not put more money to do that one. He will
This is
never
actually
risk
a
it.
trap, isn't
Yeah,
it?
because at that same level, there is no benefit of that buyer because he's
Hmm.
risking his huge money.
Hmm.
Uh,
Isn't it?
these two items failed.
Hmm.
So either you get a good position below to go that.
Hmm.
So what actually they are sellers only, which
Hmm.
now they did, they found that the seller is not going down price. So
Hmm.
what they did, they put a big order opposite.
Correct.
Exactly, they, to get the price down because
Correct.
they want to move
They
the
want buy
market.
orders to sell.
Yeah. So
That's
that's what.
exactly what it happened.
So there's a third item bigger, I would. But if the first item was big, second small, third, then I would agree to take
Yeah,
it down. The
yeah,
first was weakest.
yeah.
So there is
Puru is
difference.
talking about these attempts. So possibly this is one, this is the second, and this is the third. Sorry, and this is the fourth.
Mm.
So these are the attempts which failed for price to break.
Yeah, it's not really getting stronger. So
Mm,
the
so it's
fourth
not
item is
actually.
nobody would believe that. I mean, it's
Mm,
only amateur players will think
mm,
that it is a buyer.
mm,
No, it's not a buyer.
yeah, very good, excellent, fantastic. So any question on this? If not, then we'll go to the another asset class which is clear, which is asset class is shares. Sri is saying for 600 stop meaning equivalent to 600 AUD. Yes, if the term currency like orange juice AUD, that will be $600. What was the reason missed? What was the reason missed the break of trend line? Sorry, can you rephrase the question, Sri? Is it MISSED or misled or what is it? Aussie. Yeah. Well, which trend line is broken?
After.
Huh? Uptrend line or downtrend line? Okay, so date, starting date? Yeah, yeah, yeah. Hmm. I would not draw, I'll draw this line. Yeah, yeah, correct. Hmm. We are taking a decision here, not there. You are right. When this line trend line is broken, it's downtrend. But what to do here? when we got a bounce here, crack and snap back here. The decision point was here at this point. All right, so that was a cost. Sorry. All right, so that was a orange juice call. Now I go to the cochlear, the share, because most of you are doing shares as well. And the trade call was given on 5th of the 9th, sell 215, 5th of the 9th, 215.28, 5th of the 9th, 5th of the 9th, 215.28, 215.28, 15.28, 215.28, sell. So there was an understanding. There was a fifth of the ninth, 215.28. So 5th of the ninth, yeah, this one. When I saw this, when we saw this, we thought on this date that there is a possible short opportunity from this point 215.28 to go short, because when we are seeing this market, we are seeing this way, and that at that time it is a, as you can see, there's an all-time high. We don't know whether it is an all-time high. We just gave it is an all-time high as it can be seen there. But at that point we thought that there is a possibility that the price will go down at this point. So I put a trade here, 200 and 5th of 9th, 215.28. This is the one, 5th of 9th, 215.28. And we put a stop order here, sell stop. Stop loss would be at this point. And let's see. Wow. Orange juice, we are unlucky. We were actually on the other side of the trade, being trapped. But this fellow, we got a fantastic trade here.
But why did not you close the? Did you close the long position? How did you close the long?
No, first we'll discuss this one, and then we'll discuss if there is a trade on the long. All right, so we are in the trade actually, and in one day it has actually fallen so humongously. It's a kind of 1000 pips, yeah. It is a kind of lucky trade, I would say, because we were not knowing that this is going to happen. All right, so when we got triggered at this point, because it closed above, then slowly went through our line, and then it closed here at 204. One day, 1000 pips, and it went up, and then this fellow could not close below. Could not close above? Can you see that? It, yeah, close above this fellow. Now this close is, high is 206.41, and this is close is, actually it did 206. Sorry, what I am doing, I have to see blue bar. Sorry, my mistake. I have to do a blue bar closing above the red bar, okay, to see bar reversal. So actually this is a one bar reversal to the downside, because this blue bar, it did not close above this bar, okay. So that's a one bar reversal, and this is another one bar reversal. I'm doing bar by bar, still hanging on to trade. One bar reversal because did not close above. I don't know whether 2 bar 3 bar will come. As it comes we will see, because day by day we are seeing the chart. So this is 2 bar reversal, so I'll move this to here and write down 2 bar reversal. I hope you are following what I'm doing. So this is a 2 bar reversal. Yeah, I don't know whether 3 bar reversal is coming or not. No one knows. Let's see. We are saved, and this is above. High is 203.26, and this is 203. This bar is an interesting one. 203.26 is the close, and this bar high is 203.26 exact. So that technically actually it did not close. So I would write one bar reversal because it did not close above. It actually closed on the top. Actually we are right, and we are enjoying the trade. This is one bar reversal. I hope you are understanding. and this high is 202.78 and this fellow is 202.74. Wow, one bar reversal. Now we are still hanging on, and I think we got out here at this point when we saw this hodgepodge happening exactly at this point and at this point, and we got out at let me show you where we got. We got 1178. So 1178 plus 21528. So if anyone is strong in maths can do that quickly or can take advantage of calculator. 21528 minus 1178, so that is 2350. 2350. We got out at 2350. 2350. So we got out at 2350. Yeah, so we got out there. So we got out when this kind of base formation happens. Actually, uh, when this kind of base formation happening at a Fibonacci level, so the Fibonacci level is 61 and 50. So let's take the other ones out. 88, take that out. 38, take that out. 78, take that out. So we'll keep the Fibonacci 50 and 61.8. That's dot, absolutely dot. Yeah. So we delete the entry point, we delete this one here. Yeah, okay. So we got out here at 203.50 when there is a possible support base formation happening here. We don't know, anything can happen, but there is a possible base formation happening here, and we are happy with more than 1000 pips run on this trade. And actually this is the bar which did the magic in one day. The rest of the bars are meaningless, but meaningless in the sense they are all are one bar reversal, two bar reversal, one bar reversal, so on and so forth.
Actually, the gap is not allowing to break that.
Isn't it?
The gap given to that
Hmm.
16. That's the reason it's not
Yeah.
able to break now.
So it is possible for price to go this way or that way. We don't know the future, anything can happen, but we book our profit and got out from the trade. So any question here on this cochlear, which is an example of a share? So this way actually you can learn from the example sample trade ideas what we are doing, why we are doing, and so on and so forth. Rosemary says it closed the gap on 15th August. Which one? Is it cochlear or orange juice, Rosemary? 15th of August. Yeah, this one. Yeah, this is the gap Rosemary is thinking about. Yeah, I think Rosemary you are referring to this one, isn't it? There's
Yes,
an
but not able to break that.
yeah. So this is the exhaustion gap. This is the exhaustion gap of this move, and this is the breakout gap.
It's not able to break that.
Yeah. So this is exhaustion gap. I would write exhaustion gap, and this is breakout gap. I think Rosemary, you are referring to this gap on 15th of August, which is this one, isn't it?
But buyers will be scared to buy now immediately
Mm.
because such a big drop.
Yeah, unless and until we
They-
see a big
because the
breakout gap.
price was good actually. The buyers they would have jumped immediately and taken the price up, but they didn't. So the buyers are not interested in that price.
Mm.
Probably it might break down and then go up,
Mm.
but it will do something before the going up.
Close breakout gap. Yeah, that's correct. Yeah, close the breakout gap. Yeah, that's correct, Rosemary. You are right. And also, so also look at this big bar. All sellers out. Actually, how it got a support here. You should draw these lines.
So what is that?
See this big bar here,
Hmm.
and it did not close below the big bar to go down. That's fantastic. Brilliant.
Do you
Excellent.
see the trend line broken on the
Come again.
outside? Upper trend line broken that you will observe that recently?
Upper trend line broken. Let's see. That's good observation, Rosemary. Sorry, which trend line?
From the top to
This one?
yes, you can
There is no trend line actually. Which one to draw? This one or this one? Or
yeah,
this
that
one?
one you can draw.
This one?
October.
This one? Yeah, possible. Yeah, that's a break of a trend line. I think, yeah, Puru is right. I would not draw that trend line, possibly. What I will do is a little bit different, I think. I think I will draw this line. I will draw this line. And I will draw this line. Yeah, I will draw these two lines. So this is an example of a falling wedge in an uptrend. Because all said and done, this is uptrend. From 2014 is one way. This is the basic advantage of share trading. It went up 17,000 pips in 4 years. 17,000 pips in 4 years. That's a humongous advantage of possible trades in the asset class which is known as shares. This is the one cochlear.
Can you show me the line chart for you?
Come again?
Interpret much on the commodity line chart.
Commodity line chart. Sri has asked a question, can we use price line on commodity? I said no. No. We don't do that, Sri. You can try and let me know if it is working. Any one favorite? Yeah. Puru is saying it can be too confusing. But you have all the liberty to find it out your own way.
It creates more doubt.
That's why. That's why. Yes. All said and done, I have spent in front of the computer for this business more than 21,000 hours. So possibly if I have not observed, you can observe of course, but if it is good, we'll consider that. But Puru is saying possibly price line on this commodity will confuse us more, and we have not considered that. All right, what is your question, Puru?
The line chart.
Line chart.
Examples like how what you observe in line chart.
Puru's question is how do we what do we observe in the line chart on okay, let's go to commodity line chart. So let's this line chart. Which one? Anyone? So Puru's question is how to interpret line chart on the commodity. Now we are at 11,648, so it should be 116. Make it 120. Alright, so I hope you can see these shades here. So this is a green shade here. Yeah. So interpretation of the line chart is on this commodity is at this juncture where the green portion came here. This is the one where the green portion came here. Yeah, I think you can see that. Yeah. And at this point, we are very hopeful that this price will go up, because the first green and this next second green come here, and the interpretation of this on the line chart of commodities. Another one is sorry, my mistake. Another one is that big one. This is another big, very good explanation. Interpretation. A big one like this one, big red like this one, is a possible possible end of a downtrend, and a small green like this one here is a possible start of a uptrend. So the one doesn't matter which instrument we are in, as long as we are changing the parameters. So this is the one of startup and uptrend, and this is the one to tell us the end of a downtrend. End of a downtrend, yeah. So this big red portion is telling us when it is finishes, there is no red portion here. That means this is a hodgepodge possible coming, and actually it happened here. And then this green exactly telling very nicely. I love this one because it is actually telling us this hodgepodge is over, and with a gap here, and we are exactly starting the uptrend, and we are hanging on to the uptrend because there is more green here, and this green compared to this red is not that big. So this is a possible continuation. This is the start, this is the continuation, and this is the end. So this way you actually can interpret that.
On 14th August,
14th of August.
that one was again a red bar, 13th or 12th August.
This one?
9th August, yeah. 12th, that's the starting. You see a gap. Whether you think just now again whether it is a continuation of the downtrend.
No, I'll not do that because if I am you, I would have drawn this line. I would have drawn this line. Yeah, I would have drawn this line and wait for the break because this is a humongous base formation.
I think that is a trap.
This fellow, isn't it? This fellow is a trap. This fellow is a trap. Yeah. So I hope we have added some value to your.
Line again a broken of that.
Go ahead.
That is again a wedge broken and again continuation of that.
Isn't it? You mean this fellow and this fellow, is it?
Or you can say, yeah, that, or we can do the double line and two peaks.
Tell me the dates.
Two peaks.
Okay.
Like that, yeah.
You mean from here to here?
Yeah, that is broken.
Oh, yeah, to the upside, yeah.
Upside, this is like a
Yeah,
wedge
Puru is
broken
referring to this one, yeah.
So you can see that.
Yeah, very good.
This structure, again one more structure.
Yeah. And let's see what mistake we did for the orange juice. My goodness. Okay, oranges. Orange is 14,500, so we'll make it 145. And see the mistake we did, there was no big red to tell us that it is actually ending, and we fall into trap. This big blue is telling us that's the end of the uptrend, and this small reds is actually telling us this is the continuation of the downtrend and continuation of a downtrend. How good is that? This is fantastic actually. This is kind of fantastic, and we went long foolishly somewhere here, 7th of September. Ha ha. Alright, that's a mistake. Don't go too hard on yourself because 40% of the trades will go wrong. Alright, so I hope we have answered all your questions and analyzed all your queries and possible setups. And interestingly, more exciting things are coming when we are with close breakout gap. Whenever with N P Financials, we'll try to do as much as possible, and good things are possibly can happen if you stay with us in a platinum level. That means you are trading through our preferred broker and you are getting advantage of our discussion every day. You can call us every day and talk to us and get our idea what we are doing, what can be done on this trade, and more good things will probably will announce in the new year or on the Christmas festive season. So keep an eye on our breakout area and then trade well. Bye for now. Sri says thanks for fantastic session. Not a problem. Bye. All good?
Okay.
All right. So you're coming on which day? Huh?
Tuesday was it?
Tuesday? Tuesday you will come, is it? Okay, then you come. Please come at around 1:30, not at 4.
1:30.
Yeah, 1 o'clock or 1:30. Oh, okay. Thank you.